his speech, is going to begin talking 5 to 7 minutes. The title of his speech is Your Baby Step Toward Acquiring Wealth. He's to inform us and entertain. A financial advisor by trade, our next speaker has been an investor in the stock market since he was 18 years old. He's dealt with bull and bear markets, and now we're going to take our first step towards being a little richer. Let's give a warm welcome to Alec Tucker.
Hey guys, I want everyone to get excited, get very, very excited and be fearless. Tonight, the speech isn't mine, it's yours. What we're going to do is talk about one of my favorite subjects. We're going to discuss the basic fundamentals of investing. So you're going to go ahead and start building a some roadwork towards the path of success for your financial goals. So, who here is a musician? Okay. So, as we know from the sound of music, there are 7 basic notes. Do, re, mi, fa, sol, la, ti, and do. Yes, there are other filler notes. Yes, there are other sharps, that sort of thing. But basically, it's 7 notes. Just like there are 7 basic investments for investments. 7 basic investing tools. Let me explain. First, we have banks. Banks, we have CDs, savings accounts. We have checking accounts. Does anyone here not have a bank account? Do you know what you're getting in that bank account?
Nothing.
Nothing.
1/4 to 0.5%, with the exception of course, the recent raise in the interest rates by Janet Yellen. Right now, that would take you 140 years to double your money.
Wow.
We have an expression in Wall Street on what that means when you put your money in the bank. It's dead in the water,
Yes.
like swimming through a sharp reef. That's an investment tool number 1. Number 2 is bonds. Bonds are a debt instrument. Quite simply, they're issued by 3 different types: municipals or munis, government bonds, and corporate bonds. Government bonds are tax-free. They basically are backed by the federal government. You have munis, which are basically local and state governments. Let's say, for example, Beverly Hills wants to make a Chihuahua dog park. They don't issue the money on the spot. They have a $10 million park. They issue debt instruments with municipal bonds. So investing your money in one of these bonds gives you a small return of 2 to 3% versus the 0.25% with a bank. You also have corporate bonds, which is how we came up with cell phones and that casino you lost your money in last week.
What?
So you have companies like Apple, Microsoft, they're investing in generating income, not just through stock holders, but also through bonds. You can have governments usually don't go into bankruptcy like a corporate does. Corporate, you're going to get a higher rate of return, yet at the same time you have a higher risk factor. And again, like I said, governments don't go into bankruptcy, unless of course you're Spain, Greece, or Italy. That being said, you have another option to go to, which is the stock market. Stocks, you actually buy a share of a company. You're an actual shareholder of that particular company. And you're investing in that risk, and your investment goes up or down, taking the same risk as that particular company. Over the last 80 years, there's never been a more successful or higher return instrument than the stock market. If you're not happy with stocks, you can always turn towards number 4, real estate. Real estate's actual, it's tangible, it's real. You can touch it, smell it, feel it. The only problem with real estate is it gets expensive. It must be fed. You have things like painting, you have to deal with evictions, and people avoid it in some cases because commonly, if you're in the industry, you know there are the 3 T's: termites, toilets, and tenants. So a lot of people actually try to steer away. If you're not a fond person of real estate, you have something called insurance. And insurance is actually a very interesting discussion because you have an instrument where people seem to have to buy it but don't necessarily want to use it. Things like long-term care, property and casualty, fire. But on the other side of the spectrum, you have things like annuities and life insurance. Life insurance is a method, and these two are the most powerful investments you can make, by the way. Life insurance is for creating instant estate tax-free. Annuities are how you avoid outliving your income tax-deferred. So after insurance, we have two more. We have currency and we have commodities. Currency, people buy and sell things like the dollar, the Deutschmark, Germany, the euro, in Europe, hoping it's going to fluctuate. You also have commodities, things like gold, oil, pork bellies, orange juice, precious metals, exactly, precious metals, agriculture, also a highly volatile instrument. Generally speaking, my firm stays away from this because of the high volatility. Now, the reason I'm even mentioning all of these investments is because we have a big enemy, and that enemy is called inflation. If you took your money and shoved it under the mattress and just started saving, each one of those dollars you have are going to be actually worth a significant amount less than they were last year. That's inflation. And the only way to hedge against that inflation, which is currently at 1.2%, is to invest it in a vehicle like a stock, like a real estate, like a bond, in which case you grow your money rather than see it shrink. So I'd like to thank you all for your attention, and if there are any further questions, I want to leave you with one note, and that is, money isn't everything, but it sure helps the kids stay in touch. Thank you very much.